Nvidia recently announced earnings for the second quarter of 2023. This stock is making an absolute killing this year. We can see over the last 12 months, they're up 156%, and year to date, they're up 208%. So if you bought this stock in January, you would be up 208% right now. So congrats to anyone who did. But we can see compared to the rest of the market, which is only up 14% year to date and 4% over the last 12 months, Nvidia is definitely doing the best, or one of the best, this year so far. So in this video, I'm going to look into some of the recent news that came out surrounding Nvidia. I'm going to look at their financial statements, and then I'm going to use a discounted cash flow model to figure out the intrinsic value per share for Nvidia. So right here, this article is titled Nvidia Shares Touch All-Time High on Back of AI Boom. They point out that revenue more than doubled amid soaring demand for chips needed to train latest artificial intelligence models. Right here we can see they point out that shares in Nvidia opened 6% higher at $502 per share, capping a rally during which its stock market value more than tripled this year to more than $1.2 trillion. We can see that at the moment the market cap is sitting at $1.14 trillion. The group's surging stock price has made it one of the biggest factors behind the AI-fueled tech rally, and at least 17 brokers raised their price targets for Nvidia following the earnings update. They touch on the fact that revenue was $13.5 billion for the second quarter, up from $6.7 billion year over year, and they're predicting $16 billion of revenue in the third quarter, which ends in October. And this metric is a quarterly sales level that many analysts didn't expect Nvidia to achieve until next year, but they're already achieving it this year, so that's definitely pretty good news. Soaring demand for Nvidia's GPUs, which are dominating the market for training AI models, has made it the biggest winner for this year's boom in the industry. And as of right now, supply is their main challenge as opposed to demand. They have so much demand, but they're struggling to keep up with the demand at the moment. So in terms of the company's growth in the short term, that's their biggest challenge at the moment. CEO Huang said cloud companies were increasingly diverting their capital investment into his company's chips and away from general purpose computing as they expand their AI capabilities, which suggests that Nvidia's success would come at the expense of chip makers like one of their main competitors, Intel. Lastly, they point out that Nvidia's after-tax profits were about $6.2 billion, up from $2 billion a year before. So that's a pretty amazing return for Nvidia. Right here, we can see their financial statements. Revenue, as the article touched on, is up from $6.7 billion to $13.5 billion. That's an increase of 101% in their sales revenue year over year for the second quarter. And then net income increased even more from around $656 million to $6.18 billion. That's an increase of 843% year over year for their bottom line net income. That's the highest increase in year over year second quarter earnings that we've seen from any company so far. And of this 101% increase in revenue, their data center revenue came out to $10.3 billion in the second quarter, which was up 171% year over year. So a ton of growth for Nvidia's earnings and revenue. For their balance sheet, we can see total assets come out to a little under $50 billion, and they have $22 billion of equity and $27 billion, or $22 billion of liabilities and $27 billion of shareholders' equity. Lastly, for their cash flow statement, we can see operating cash flow came out to $6.3 billion, up from $1.2 billion in the second quarter of 2022. And then we can see that for financing activities, they repurchased common stock of $3 billion, repaid debt of $1.2 billion. So that obviously makes their financial position a little bit stronger. And then for dividends paid, they paid out around $100 million of dividends. So a lot of good news for Nvidia. Revenue is up a ton. Earnings is up over 800%. And they are still repurchasing common stock and using some of this cash inflow to pay down the liabilities on their balance sheet, as we can see right here. So this is the discounted cash flow model. I'm using 3% for Nvidia's growth rate, which is extremely conservative. You definitely want to do your own due diligence when you're using a model like this. But I got that from their historic free cash flow growth. In 2018, they had free cash flow of 3.14 billion. In 2022, they had free cash flow of 3.8 billion. So that's increased at about 3.9% compounded annually over the last 5 years. But I suspect that their free cash flow for 2023 is going to be way higher. I believe that right now, over the trailing 12 months, Nvidia's free cash flow is around 10 billion. So once they post their 2023 free cash flow for the full year, that's obviously going to alter this historic growth rate, and it's going to alter this output for this discounted cash flow model. And based on that, they might be trading below intrinsic value per share because their company has been growing so rapidly very recently in 2023. But these metrics come from 2018 to 2022, and based on the growth over the last 5 years, this is the growth rate, so I'm going to be using that for the purposes of this model. Free cash flow in their most recent full year, 3.8 billion, net cash of 3.2 billion on their balance sheet, about 2.4 billion shares outstanding, puts their intrinsic value per share at only $21 per share. So obviously they wouldn't be trading below intrinsic value per share at the current share price. And as I said, these are very conservative estimates, so I encourage everyone to do their own due diligence. In order to calculate the weighted average cost of capital, which was 8% by the way, I used this weighted average cost of capital calculator right here. We can see their interest rate in 2022 on all their debt was about 2.3%. They had net tax provisions, so they had a net tax benefit from their tax rate in 2022. That's why it's negative 4.5%. And then they have a beta of 1.75, so they're a little bit more volatile than the rest of the market. And based on that, we can see cost of equity came out to 14% and weighted average cost of capital was about 8.8%, which is what I used to calculate the discount rate for this model here. Then right here, we can see in terms of industry analysis, I compared them to AMD and Intel. Across the board, Nvidia is dominating. They have the highest gross profit margin, highest net profit margin, highest return on assets, and highest return on equity. But we can see they also have a higher debt to equity ratio than AMD, and it's right around the same as Intel's. Right now, over the most recent quarter, AMD and Intel weren't really that profitable, so it's difficult to calculate a price to earnings ratio, but Nvidia was, and we can see right now they're trading at around 113 times earnings. And then based on dividend, we can see Intel pays the highest dividend, but keep in mind Intel stock is down quite a bit over the last year, whereas Nvidia's stock is way up. So even though the dividend yield looks a little bit more attractive for Intel, you definitely want to look at the company's stock price trajectory as well, because if you buy into Intel and their share price plummets, but you buy them for the dividend yield might not be able to cover the losses you experience from the depreciation in their share price. So overall, it looks like you definitely want to give it to Nvidia for this competitor/industry analysis. Compared to other companies we've looked at in past videos, Nvidia was not trading below intrinsic value per share. We can see all of the companies here that were: Occidental Petroleum, ExxonMobil, AMD, ConocoPhillips, Chevron, Google, Alibaba, Albertsons, Etsy, and Apple. For growth rate, we can see one of Nvidia's main competitors, AMD, is sitting at the highest growth rate over the last 5 years compared to any company we've looked at, which is around 83%. I actually forgot to update this right here. The last time I made a video for Nvidia, I was using a 33% calculated growth rate, which I had gotten from Yahoo Finance. But this time I decided to just use their historic growth rate, so I'll definitely have to update this table and move Nvidia down to the 10th place spot now with their 3% growth rate. For gross profitability, they had a 56% gross profit margin, puts them in 10th place compared to other companies we've looked at. Adobe had the highest at 86%. And then for net profitability, they only had a net profit margin of 16%, which was not good enough to get them onto the net profit table. Oxy had the highest so far at 36%. Then right here, dividend yield, obviously not that good, but Intel has the highest at 5.52%, another one of their main competitors. And right here for Q2 year-over-year revenue and earnings growth, Nvidia sits at the top for both tables. So as I said when I was looking at their financial statements, definitely the highest out of any company we've looked at. They had 101% year-over-year revenue growth and 843% year-over-year net income growth. So very impressive, puts them in first place on both tables. Lastly, for stock performance over the last 5 years, Nvidia comes in second place. They're up 653% over the last 5 years. I'll have to update this a little bit. Actually, I'll update it right now. So 653.45% with a share price of 458.70. So that's obviously an extremely good return for Nvidia over the last 5 years. The only company that's been doing better than them was Tesla, with their return of 1,144%. So based on this, Nvidia is obviously extremely competitive compared to the other companies we've looked at. They have one of the best returns over the last 5 years. They have the best second quarter year-over-year revenue and earnings growth. They have a very high gross profit margin, not as high as other companies we've looked at, but definitely good enough to get them onto the table. But compared to other companies for all the other tables, they weren't good enough to really be that competitive. Compared to other companies in their industry like AMD and Intel, it looks like Nvidia is very competitive. They have the best profit margins. And then based on this DCF model, they're currently not trading below intrinsic value per share. So let me know in the comment section down below what you guys think of Nvidia. This stock is up 51,000% all time. They're obviously performing really well, and more recently, they've been producing an extremely good return. So let me know in the comments what you guys think of Nvidia. Leave a like on this video, subscribe to the channel, and I'll see everyone in the next one.